Hey guys, it's Savannah with Fine Properties, and today I wanted to give you a quick Q4 market update for where our real estate market here in South Florida stands when it comes to affordability. Did rates go down like they predicted? Will they ever go down? Has housing gotten more affordable in the past year? And where do I see my predictions as far as the real estate market going forward, at least here till the end of 2025? So to start things off, of course, I talked to a lot of buyers at the beginning of 2025 that realized, okay, I'm just going to wait for interest rates to come down. That's what they're saying is going to happen. So I'll wait for that and then I'll be ready to buy. The reality is, even at the beginning of the year, I knew rates weren't going to come down, at least not enough to change affordability. While there might be some slight changes, at the end of the day, we are sitting at industry standard interest rates or historically standard interest rates, 5 to 7%. So us as an economy cannot afford to sustain rates much below that for a long period of time. When they drop rates, it's usually to combat inflation or economy issues. And in this case, I just don't think they're going to make enough of a drop to really affect affordability, which is a problem for most people looking to buy here in South Florida. Right? So where does that ultimately put you? If you were one of those buyers that was waiting for rates to come down and they've been teasing it on the news and in the headlines all year, I would say learn to afford a home in today's market with a 5 to 7% interest rate, because that's more realistically going to be the historical average interest rate going forward. So rather than waiting for rates to drop, which typically and historically creates a more competitive environment, so even if rates drop, historically, then usually prices go up. Doesn't necessarily make it more affordable. So even if it does come down significantly, it doesn't necessarily fix the issue of affordability in South Florida. Plus, what most people do not realize is it's not just interest rates that are affecting affordability here, especially in Palm Beach and Martin County. Number one, prices are not dropping as fast as people would like them to. Yes, the market is cooling. Yes, things are coming down slowly, but prices would have to come down pretty significantly to affect a buyer's monthly payment at a drastically noticeable level. So that, combated with interest rates that didn't drop as much as we were hoping them to, plus the cost of insurance in South Florida, plus property taxes. All four of these factors here in South Florida are actually affecting affordability, and all four of these issues are not going to solve themselves simultaneously overnight. So what I'm more so recommending for my buyers who want to wait for one of those things to give and make housing more affordable, you could be waiting for a while. I have buyers that have been waiting for 6 to 8 years. It's gotten worse. It has not gotten better. So if you are somebody that actually wants to buy and build equity with real estate, learn how to afford a home in today's market. So that way you don't have to worry about if rates don't come down and I can't refinance like I was hoping to. If taxes go up, they always go up, they never come down. If insurance goes up, again, usually goes up, never comes down. So if you're worried about those things being factors you cannot control, if you learn to or work yourself towards affording a home in today's market, then it's going to open up more options for you and give you a little bit more peace of mind of the unknowns. I understand this is a big ask, that working your way to affording a home in Palm Beach County is no joke. And sometimes we have to go outside of the county to get things that are truly more affordable. But at the end of the day, what I would encourage people to do is, versus waiting, because waiting could cost you more, even if the market crashes and prices come way down. Again, they'd have to come way down to get any monthly payment off, right? And where at that point is interest rates, taxes, and insurance going to sit? Are they going to balance out? Is anything really going to get affordable? I don't know. Nobody has a crystal ball. So if you're tired of renting, you want to get into buying real estate, what I recommend to all of my buyers in this market, in any market, is get in front of a lender. A local lender is ideal, but a bank or somebody that you trust, and build a game plan for how you can afford real estate in today's market. And that might look like negotiating credits to buy down a rate. Guys, it's a buyer's market. You guys carry the bulk of the power when it comes to negotiations. You might be surprised what you can negotiate in today's market. If you're worried about prices coming down, well, if you can negotiate 10 to 15% off your price, and homes are depreciating at a 2 to 3% rate per year right now, that covers you for the next 5 years of depreciation if prices continue to go down, right? negotiating a credit towards closing costs. You don't have to bring as much money to the table, putting money back in your pocket for any renovations or home updates you might want to do once you move into the house, or using those credits to buy down your rate for life of the loan, which is going to buy you back the most amount of savings on your monthly payment versus trying to reduce the price. So all of these things are things that you can build together with a real estate professional, a local lender, and a great insurance company to figure out, how can I afford a home in today's market? If I can't now, what do I need to do with my credit, my loans, my etc., to put myself in a position to be able to afford a home rather than sitting and waiting for things to become more affordable?